Global stock markets plunged recently following weak U.S. jobs data that intensified fears of a recession in the world's largest economy. Now, this downturn saw Dow dropping more than 1,000 points, with significant declines in Asian and European markets as well. The data has spurred speculation about multiple Federal Reserve interest rate cuts. Joining us today on TVP World to analyze these developments and their political implication is Professor Paweł Wojciechowski, former Polish finance minister. Hello, sir, and welcome to TVP World.
Nice to meet you.
Now, right out the gate, we're looking at a global stock market crash in world markets. And do you think this is a sign of what Trump calls the Kamala economic crash?
Well, that is a purely political story because if you look at now, the markets today, of course, after this what we call it Black Monday. You have a you have the Nikkei stock market increased, so it's rebounding, So this question is whether we have the effect of, for example, any vice president of the United States never had influence on the stock market. So the question whether we could look at some prospects for the economy based on the economic program of future nominate by Democratic Party Kamala Harris versus Biden policy. So of course, we had in the past we had this notion of Bidenomics. When inflation picked up, Biden policy, economic policy were quite good to lower the inflation rate and contain the growth and invest in infrastructure. So question whether Kamala Harris will continue this policy if she becomes a president, and how does it compare to what you call it Trumponomics, if you can call it, because now you look at the first name of the presidential candidate, Kamala. It's not Harrisonomics but Kamalanomics. That's the first element. Second, question whether this crash could happen. Donald Trump talks also about the Third World War, what could happen, that would be the Democratic administration. So I think if we see the stocks are bouncing, in the United States, maybe you say, well, nothing happened, So the first thing is how the Trump administration, the Trump advisors are trying to kind of redefine the campaign to talk about Kamala Harris and his future running mate. Who knows who it will be.
All right, so there is a little bit of a kind of political messaging right there, right? Trying to tie whatever economic phenomenon happening to politics. Maybe there's relation, but probably not this close to each other.
No, because if you look at the probable outcome of the new policy, let's call it new policy of Kamala Harris, if she becomes a president, that will be probably the continuation, which is stability, macroeconomic stability. The same we can say about Jerome Powell, who's a Fed chairman, that he will not increase, emergency cuts of the interest rates or increases. So that will not happen definitely. But he will not enter into this lowering cuts of the interest rates. So we're talking about some stability, investing in infrastructure, promoting industrial policy, taking care of the social spendings, and maybe even moderating this more social wing, agenda of the Democratic Party. So I don't see any dangers to the economy, although Americans are seeing Trump as a person who would bring a better outcome for the economic and prosperity and financial prosperity of Americans. Little bit more optimistic about Trump than about Kamala Harris. But I think that is very close call between the two.
Right, but top investors such as Warren Buffett actually have been dumping his own stocks, also jumping on this phenomenon where there's a mass selling in his portfolio. Do you think that's an indicator that some of the top economists are looking at a potential kind of a crash?
Yes, everybody's watching Warren Buffett, and he's my hero as well. This reshuffling, this rebalancing or this rotation of stocks coming out from high tech, and he dumped Apple stocks, and maybe Intel because has some problems with microchips. So this rebalancing took place already a couple of weeks ago. So this is not great news, okay? Yeah. So this happens, that you rebalance the portfolio because the relative strength of certain sector of the stocks are too strong. So this was high techs. You can see, for example, yesterday ruling of judges against Google on antitrust practices. So probably Google would go down as well. Right. But also, Nvidia and other high techs, and everybody is moving into utilities and moving in small caps. So altogether, the markets are, I would say, a little bit overvalued in some fragments, but they are pretty stable. I think you will see the rebound on the New York Stock Exchange. We will see in Nasdaq. You will see it probably in Warsaw as well.
Do you think the hype in AI technology, which is being on the news cycle, being talked about every day, did give a little bit, too optimistic of a projection when it comes to these tech stocks?
Yes, you had in the past those bubbles, okay, of high techs. You had the bubble, internet bubble, in the past as well. Now it's an AI bubble. It comes from ChatGPT when it was introduced, and all ideas that artificial intelligence will bring the high value of stocks, and maybe they were overvalued now. And now they are going back to reality.
Right. Now, can you help us understand how significant is the link between weak U.S. jobs data and the global market plunge? Is that some kind of ripple effect that can affect this part of the world? Well,
if you look at the macro data, always, I used to be an investment advisor. I used to be running pension funds and investment funds in Poland. In fact, you have to look at both macro and micro level. In terms of macro level, of course, the important element that you have to watch today are the global security concerns, not just the macro. For example, what will happen after killing of the leaders of Hezbollah in Lebanon? What is the threat of Iran against Israel? What could happen there? Would it be a regional war that would, for example, boost the oil prices or not?
Right.
This is the concerns that you're looking about, but I think this is relatively, it's not in the prices yet. I think if you look at the futures for oil markets, I think that this is a little bit going up, maybe 5% up, but it's not at the level maybe of 100% per barrel. So I think that we have to look with a sort of grain, that we don't want to overdo it. You don't want to overreact. You don't want to panic. Especially retail investors should not panic. And the same happened in Ukraine. Would this war evolve? We have 91 days to U.S. elections. I don't think nothing will happen dramatically between Russia and Ukraine. That it will continue the way it is. And the world would wait, what will happen in November, who will win the race for President of the United States, because that will determine, the policy towards Russia, and to some extent, of course, it will maybe moderate the policy in the Middle East.
Right. So yeah, a lot of people would like to make speculations and extrapolate what will happen in the future. But like I said, maybe it is very important to also keep a calm mind and stay collected and not stress out over it. And meanwhile, we were talking about how politics might affect the economics. Let's kind of turn it around and let's say if this phenomenon continues, how do you see that affecting politics?
Well, in fact, if 45% Americans believe, for example, that Trump is a better option in terms of economic prosperity, and only 25% think that Americans would believe that Kamala Harris is a better candidate from the point of view of financial well-being, that might affect, because if people don't understand, that we had quite a good growth in the U.S. economy, and they believe they are hurt because still there's some inflation, and wages went up, but maybe inflation is lingering still, that means that we'll vote for Trump because they will believe that Trump is a better candidate. And then, of course, it will change the geopolitics. So, of course, it's both ways, okay? So it's very closely interrelated. But I think the economy, you don't. If I would be advising, the retail investors, I would say there is no big change that will happen in terms of economy in the United States because of the elections. Please remember that, for example, Biden administration in May introduced 100% tariffs against electrical vehicles imported from the world, including that, of course, aimed at China. But of course, it means that those type of actions are more important. Specific actions. Import tariffs. What it would mean for the Europe, for example, whether those electrical vehicles would be exported from China to Europe. What Europe would have to do, prohibiting, the flow of electrical vehicles to Europe. Those are the questions. So it all comes down to some details in policy, both domestic policy, which are boosting demand. Usually, most of the countries are boosting demand, internal demand, except China, of course, versus, for example, what they do in terms of industrial policies, subsidies. How do they, pump up some segments of the markets? Those are the structural changes that we have to look at. It's very difficult to look from the point of view of individual investors or citizens who vote. Definitely, the most important is that we continue to think that there is a realignment and good cooperation between across Atlantic, between European Union and the United States. This is for matters for Poland as well. So we have to watch closely what will happen in terms of economy, of course, but especially what will happen with U.S. elections and whether those elements of stability, of security, will not take away would not create new risks, to the economy. Talking about the Middle East, for example, or Russian aggression to Ukraine, or maybe Taiwan, who knows?
Definitely. Turbulence is the last thing we need right now. Thank you so much for your input and insight, helping us unpack all this situation. Really appreciate it. Thanks again for being with us.
Thank you very much.
And thank you for watching. This has been World Talks on TVP World. For more news, update, and commentary, please stay tuned.